first one is the balance sheet equation. Now the balance sheet equation basically says assets equals liabilities plus equity. In a business, what are assets?
Cash on hand.
Cash can be an asset. Good.
Inventory.
Inventory is an asset. What else? Property. Equipment's an asset. Yes. Anything you have, like the physical stuff. Sometimes you own it. Sometimes you owe for it, right? Sometimes you borrowed money for it. Okay? That's what the other part of the balance sheet equation tells you. Over here you have the stuff to run the business. We call those assets. Over on this side of the balance sheet, that's the reason it's called a balance sheet, this has to be balanced by how are those assets being paid for. Liabilities, that's how much you're being paid for by debt. Equity's what? What's equity?
Investment you have.
Initially, it's money that investors put directly into the business, right? Now that builds up if we're profitable over time. Now let me ask you this question before we go any further. How many folks in here are from non-profit organizations, okay? Non-profit organizations don't have investors, do they? Right? So we don't have this concept of equity, do we? Instead, does anybody know what the word that describes equity is instead for non-profit organizations or government agencies? Okay, funds or funding, right? You go out and you do fundraising, you get grant funds. Instead of investor capital, you get fundraising capital, you get grants, things like that. So what I'd like you to do in your workbook there, under the balance sheet equation, I want you to put a slash behind the word equity if you've written that down, and add to that or funds or fund balances is sometimes what those are referred to as. Is that clear? If I own a house, a very modern looking house, right? Like a condo or something like that. And the value of that house is $250,000, we'd call that the asset, right? If I had an outstanding mortgage balance of $100,000 on that house, that would be the liability. So how much equity would I have in that house? $150,000. That's the first fundamental equation that we keep track of when we're looking at financial information. What are the assets? What are the stuff that we're using to run the business? And how's it being paid for? Does that make sense? Right. This is the first equation when we're starting up a business that usually has stuff in it, because we have to put some money in to buy stuff to get the business rolling, right? All right, now the business is rolling. We're going to go to the second equation, the profit equation. Hopefully, during an operating period, money comes in. That's a nice thing, right? When people actually buy our products and services, right? We call that revenue, sales, or income when money comes in. But money also has to go out when we pay what kind of stuff? What are expenses, examples of expenses? Labor, we have to pay people. Okay, what else? Overhead, other types of costs, yeah, material, things like that. Hopefully, income or revenue minus expenses equals what? Profit. For-profit companies have a tendency to call the top line revenue or sales. Non-profit or government agencies have a tendency to call it income. Also, for-profit companies will call the bottom line profit, whereas non-profits or government agencies will call it
income and excessive expenses.
Okay, income and excessive expenses, I've heard that. Also sometimes referred to as surplus, right? Or if they run negative, we'd call it, in the for-profit world, we'd call that a loss. Okay, or in the non-profit world or government agency, we might refer to that as a deficit. Very good. The second equation. The third equation, which can be different than the profit equation, is what's called the cash flow equation. Now, people might buy our products and services on credit. All right? We have to keep track of that for sure, but sometimes they actually pay their bills. That's when cash can sometimes come in. Either cash customers or customers we've sold to on credit actually pay for their stuff. That's a happy day when that check shows up in the mail or in your bank account, right? If you're a small business owner, you know what I'm talking about. especially if you're getting going, right? And then cash actually has to go out when we actually have to write checks to people. And hopefully we have a positive net cash flow. Is it possible to be profitable but out of cash? Under what scenarios? How could that possibly be? My reports say that I'm making tons of money, but my bank account's empty. How could that be? Receivables. You get all happy when you get new customers, right? And you sell on credit, and you report revenue. But if you don't have a good collection strategy and people don't actually pay, can that cause problems? Okay, what's another scenario where you could be reporting profit, but not have enough cash?
Buying more raw materials over and above.
Yeah, here's the thing. When you're getting started, you need cash if you actually have products that you're selling to buy raw materials or to buy stuff. And if you don't have good inventory management, can that quickly get out of control? Right. And have you guys ever heard it said, cash is king? Well, I want to clarify that a little bit. I do want you to write that down next to cash flow. I want you to write, cash is king. But we need to qualify it a little bit. Cash is king. Can you have a lot of cash at any particular point in time, but be unprofitable? And is that sustainable? No. So in the long term, what's really king? Well, revenue coming in, but we also have to have the costs associated with it in balance to produce the revenue. Profit. Profit strategically is king. Cash tactically is king. See, cash is king if you don't have it. And if you don't have it, you guys know what I'm talking about, right? If you don't have it, look, if you don't have cash at any particular point in time while you're ramping your business or through the ups and downs in your business, if you don't have cash and your suppliers won't send you any more stuff until you paid your bills, your employers won't wait any longer. Have you guys ever worked for a company that couldn't make payroll? You know what I'm talking about? They won't wait any longer to get paid. The banks won't give you any more money, and your investors, maybe sometimes your relatives, you know what I mean? They won't give you any more money. Are you dead in the water? Yeah. Tactically, cash is king. If you don't have it, or if you're in startup mode or in one of those cycles of your business where you really need it. That make sense? So let's build on that foundation. Any questions about those equations before we build on those and talk a little bit more formally about the three basic statements? You guys happy you came today?
Oh, yeah.
Give your partner another high five, handshake, or hug. Say, you know what? This is awesome. This is probably the most awesome workshop I've ever taken. Please just say that. Go ahead. This is probably the most awesome workshop I've ever taken. Okay, excellent. Let's go to the bottom of the page. All right, so the balance sheet. Just a few more words about these three basic statements. The balance sheet is a statement of what we own and what we owe as of a point in time. The word snapshot of a point in time has been used. You guys heard that? Snapshot as of a point in time? Well, those points in time are usually at the end of an operating period. The most basic operating period that people report on is a month, right? So at the end of the month, let's say at the end of November, you close the books and you take a snapshot on what the balances of these assets, liabilities, and equity are. Does that make sense? Now, from the top of your page, what I want you to do is draw a line from the balance sheet equation down to the balance sheet. Because that forms the foundation of this balance sheet that states what we own, what we owe. So we have the stuff of the business, the assets are a balance between what we own outright, the equity, and what we owe, the, of course, liabilities. Excellent. It's all right. It's all right. We're warming up. We'll be all right. Okay. The second statement is the income statement, which answers one basic question. Are we profitable for a period of time? So we say period of time. Now we're talking about during one of those operating periods, like November. All during that period, money came and money went. Money came in the form of revenue or sales or income. It went in the form of And when the books were closed, that's okay. You guys you'll get the timing of when to like just jam it in there. That's cool. Okay. And then when the dust settles, we're either profitable or we're not. We either have a surplus or a deficit for that operating period. Does that make sense? Finally, the cash flow statement, what that tells us is basically, can we pay our bills? Can we keep functioning? Or where did our cash come from and where did it go to? And how did our cash balance in the bank change? That's what I really want you to write down. How did our cash balance in the bank change for that operating period? And why? Any questions about that? Okay, then we're done with that page. Go on to the next page.